Hi guys, my name's Josh Mahoney, Chief Market Analyst at Scope Markets. Thanks for joining us today. Let me just get rid of that noise. Thanks for joining us today on this US election outlook. Of course, we have this coming up at the moment. Let me just, one moment. Let's get rid of that. Okay. Thanks for joining us on this US election outlook. My name's Josh Mahoney, Chief Market Analyst at Scope Markets, joined by Timothy Kyrie over in Kenya. If you want to introduce yourself, Timothy.
Yeah, thank Josh for having me. My name is Timothy Carrier, market analyst, Scope Markets Kenya. It's my pleasure to dissect the market in regards to what we're anticipating in the US election.
Good stuff. Good stuff. Right, so we've got an hour to get through a lot of stuff. We've got so many slides that are going to give you insights into exactly what markets are pricing at the moment, what market expectations are. Are they right? Are they wrong? What could be the big repercussions in terms of the markets? And how could things trade into this event? How could they trade after the event? Plenty to get into. Bear in mind that we have also got another event in roughly a week's time, just over a week's time, on Thursday the 7th, as we tried to break down exactly the fallout of this event as well. So how to trade leading into it and how to trade after this event. Two major webinars, and certainly we're going to try and give you as much value for this as possible. Bear in mind that we have just announced that there is a spread discount of 60% with Scope Markets for this event. Go onto the homepage for Scope Markets, and you'll be able to see more details around this. But certainly we are aware of that, the fact that people want to trade a lot around this event, and I'm expecting to see major volatility leading into it. And that really brings us into the question of what we're expecting to see and why is this important. First and foremost, what is at stake? Timothy, as you know, regulatory changes, economic policies, there's a lot going on for this event, really, that people should keep abreast of.
Yeah, sure. I think actually what is at stake is what basically makes this election to be quite enticing. And when we try to digest, especially in terms of regulatory changes, what we are looking at is that we all know that elections comes with changes depending on which whoever candidate wins. Of course, they want to implement their manifestos. So this election, actually, I'm looking at it bringing major changes in terms of regulation that could impact different sectors in terms of the stock market, also the forex market, the indices as well. So it's good. To ensure that as a trader or as an investor, you are aware of these regulatories, and that's what some of the things that we are going to digest in this webinar. In terms of economic policies, basically each candidate offers distinct economic policies ranging from taxations, spending initiatives, all that kind of stuff. Again, these are things that we find they affect the market in the long term. Then we anticipate kind of volatility. We have seen each and every time we have these kind of elections, we see a lot of volatility in the market in terms of volatility. And this is actually good for investors, for traders, because during this volatility, actually that's when money is made, right? Geopolitical implications, that's a no-brainer. We know currently what is going around. Even irrespective of the US elections, we have seen a lot of geopolitical tensions escalating from Israel and Iraq. We have seen Iran coming into play. We have seen Lebanon. So it's ballooning, man. So it's one of the things that we want to consider in terms of also, even as we are looking at the US election, because it's going to play a key role. Public sentiments, definitely. We know that every candidate's position on social market, on social matters like maybe probably the health sector, education sector. So these will form different opinions in terms of public sentiment. And that's actually the topics or the thing that has been ongoing in the markets. I don't know what's your take, Josh, about the same?
Yeah, I mean, look, all of the above. The fact of the matter is that we're faced with two candidates that aren't necessarily too similar, right? So on one side, you've got a whole raft of policies that might benefit certain sectors. On the other side, you might see those sectors suffer under a different candidate. You're talking about differences in terms of tax policies, whether one's cutting taxes, one's raising taxes. And for traders, really, it's the ability to try and digest all this information and try and understand what they think might benefit or lose out of that. And what's actually interesting, and we're going to get into it, is that we've already seen some significant moves recently that might give us an idea of what might favor what candidate or what condition. As you can see here, the key dates, ultimately the election day is on the 5th. It says the 6th of November for the expected results. Look, it really comes down to how things play out, as you've seen in the past when we saw the sort of slow counting of postal votes. This can be a protracted process if you see very tight contests in some of these key swing states, because they might have to then recount and it drags on for an extended period of time. But I'm hoping this is something that is going to be relatively swift with the inauguration on the 20th of January. Current market overview. I just wanted to take a sort of step back and think about where we are at the moment within markets. Of course, we're seeing the US dollar moving towards the upside, the 10-year yield and essentially yields across the board moving towards the upside. And that coming at the same time that we're seeing strength for equity markets over in the US. That is not necessarily a typical reaction where we see the two of them moving in tandem. So you've got our question whether we're going to see one or the other start to reverse its current trajectory. Certainly, we've seen from an economic standpoint relatively strong data coming out. Certainly, when we're looking a month back, the jobs report, and that's why this week is so important, because we've got all of these earnings numbers coming out from the 5 of the Mag 7 names. And then we've got a week that ends with the non-farm payrolls release. So certainly it's a massive week coming into, of course, this US election.
Yeah, sure. For me, actually, what entices me in the times of the current market, we look gold at all times high, silver at a decade high, because right now where silver is, it's about, it was there last time, I think about October 2012. That is the current price where it is at the moment. So we are seeing indices like S&P 500 at all times highs, NASDAQ all times highs, a couple of stocks as well, they are at their all times highs. And also, to make the matters interesting, we see the US debt also, it's at all-time high. So it's quite interesting at the moment entering these elections, the way the markets are. So I think it has never been that in the previous election. So this makes it to be really quite a unique election.
Yeah. And I mean, it's funny because the fact that you mentioned debt at an all-time high, the question mark is whether markets care about that or not. Because when we're looking, and we will look into this, Donald Trump, he proposes pledges that would see that debt rise further. So, markets supposedly think that Donald Trump is good for markets. Well, it really depends on your outlook, because we're talking about the possibility of a surge in terms of debt, which is already a problem. Right. So who is going to win? That is the big question mark that, of course, everyone would like to know the answer to. And it feels like markets already think they know the answer. And that's because we've seen this so-called Trump trade really pushing forward of late. Key to this is the fact that October has essentially seen a major turn in terms of some of the expectations on who's going to win. That's happened at the same time that we've seen the strong jobs report from a month ago, and at the same time that we've seen the US dollar move towards the upside and yields moving up. So people say it's the Trump trade. Maybe it is, or maybe it's a reconfiguration, because remember, a month ago, we were talking about a 50 basis point cut in November from the Fed, and potentially another 50 from the Fed in December. Now markets are pricing 50 in total maximum. And so that has been a significant shift that's happened alongside this rise in popularity for Donald Trump. But that rise in popularity has not necessarily come from the polls. The rise in popularity comes from the betting market. As you can see here, 3 key markets that you're able to bet on who's going to win. And they have all moved very heavily towards Donald Trump. So the question mark here is, do we believe the bettors or the pollsters? And bear in mind, these betting markets, not all of them are US only, right? So just because some people maybe Republicans are more predetermined or predisposed to bet for Donald Trump than the Democrats. And maybe people in foreign countries feel more confident about Donald Trump winning. So certainly it feels like the tide has turned in public opinion, but that's formed off of betting rather than polling itself. So certainly something worth noting, because when we look at the polls, some of them have Harris leading, and certainly it looks very close. So is this Trump trade going to be derailed? That's certainly something that we need to bear in mind. If you're just presuming that Trump's going to win because the betting market tells you so, that's probably going to be less reliable than the polls. And the polls do point towards it being a lot closer. If we see here that we've got the swing states, that essentially, when you look at these elections, there's going to be a handful of states that are really going to clinch it. And the swing states, as we highlight here, have got it tight, but we have been seeing Donald Trump moving ahead, notably in some of the regions like Arizona, Georgia, and tighter in some of these other areas. So certainly for traders, they need to be aware of the fact that there's a handful of states where you're likely to see really major market moves around that. And we can see that once again here. This is the latest polling from Atlas Intel, which does point towards strength for Donald Trump in a number of these swing states. North Carolina is the only one that has Kamala Harris ahead on. So certainly, as we move throughout this event, you're going to be seeing movements within markets, but also particular parts of this event are going to see significant volatility. And that generally is going to come around these 7 swing states where if it swings in Harris's favor, maybe you start to see some of the recent moves unwind. This is the breakdown in terms of those swing states according to betting odds and the polls. And, different polls give you different reactions. But key to this is on the right-hand side, it's got a insight into exactly when the previous results were called by the Associated Press. And that gives you a good idea on when you might see some of these results coming in. This is Eastern time, but you can, of course, adjust it to your own time zone accordingly. But certainly, I think when we're looking in terms of the major volatility, it's probably going to come when we start seeing some of these key swing states announcing. So the next point of conversation is whether Harris is bad for markets and bad for the economy, and Trump is good. And certainly that is the perception at the moment. Do you have a perception on this, Timothy? How do you feel with this? Do you think markets are going overboard on the idea that Trump's good or that Harris is bad?
Maybe to mention, before I mention about these, my take about the opinion polls, just as the name suggests, those are just opinion, because sometimes it doesn't happen like the opinion polls. So the real determinant is the actual vote itself. But again, we cannot ignore the opinion polls, because again, for me, I consider them in terms of sentimental analysis, basically trying to give us an overview of maybe what part of the people are saying, because not everyone who is interviewed in these opinion polls. So they're kind of biased sometimes, because when you look at different opinion polls, others will say Harris is leading, others will say Trump is leading. So basically, they're trying to play around with our sentiment. So the reason why the actual data on October 7th October 6th will be very, very crucial. Back to your question about whether Harris or Trump is good for the market, whether Trump is good for the market. So looking at the previous Trump regime, for me, I think Trump looks kind of good for the market. In terms of also as an investor as well, because I remember during Trump's regime, we used to term Trump as a trading signal, because every time Trump could stand to make a speech, of course, the market could move. But we have seen quite a different scenario with Joe Biden. Of course, what Joe Biden is propagating is what Harris is going to continue with, because they have been in the same government. They're both of them Democrats. So, but again, you want to look at it in terms of different policies, what they are basically looking at. Policy by policy, how these policy, maybe their policies are going to impact the market. But overall, in my view, I would say that Trump looks quite good for the markets compared to Harris. I don't know if you have a different opinion.
I think that sometimes all that matters for the near term is perception, right? It's just what markets think, and the markets think that Trump is better for them, in part down to the idea of, tax cuts for businesses are better than tax hikes for businesses. But yeah, certainly you're talking about, when Trump was in power previously, look, he caused volatility because I remember every single day I was having to talk about this trade war with China. And a lot of that did cause significant uncertainty within markets. It caused people to grow fearful about the idea that suddenly we're going to see a breakdown in global trade. It wasn't going to be good for anyone. And, there is a feeling that he's, very pro-US. It's, America first kind of thing. But markets grow fearful about too much change. And that's why, there's going to be volatility, but it's not a given that, Donald Trump is the one that is amazing for markets. And bear in mind, we're coming off the back of a period of time under Joe Biden where, well, we've seen unemployment fall, we've seen inflation fall, we're seeing record highs for US equity markets. So it's not to say that it's been awful under the Democrats either. Here's a breakdown in terms of some of the differences that we can see in terms of policy across the two. Key to that is the difference in terms of corporation tax. Really higher corporation tax under Harris, lower corporation tax under Trump. And of course, that has implications for profitability for firms and earnings per share calculations and the like, and expectations going forward. So you can see just on that sort of core level on the top why people think, Donald Trump's the one, right? We don't want to see these companies suddenly be taking a hit off the back of it. Elsewhere, you can see personal tax is an extension of the 2017 tax cuts. But when it comes to Harris, she's talking more about taxes for higher earners. So probably wouldn't hit most people with that 400K threshold, but then helping people on the sort of bottom end. So expanding income tax credits for lower income workers. When we're talking about other areas, and we're going to talk about sort of sector by sector basis, we're looking at healthcare. So yeah, Trump's talking about transparency, promote choice, competition, but it's different from Harris, who's actually out to try and lower prescription prices and price gouging. So not necessarily great for those producers of the drugs particularly, but potentially good for insurance firms, where we could see expansions of Medicare, Medicaid and treatments, so people will be able to get healthcare. Elsewhere, you can see, defense, I think, is going to be a really key one. You talked about geopolitical concerns. Well, Donald Trump said that he's going to end the Ukraine-Russia war within 24 hours. So you could say on that side that some of these defense firms could possibly suffer under Trump. But, he's the kind of guy that likes to spend a lot of money on the military anyway. But certainly the Ukraine support, I think, will still roll on for a little bit of time, irrespective, because Joe Biden has essentially front-loaded a lot of the funding for Ukraine in any case, probably because he knows that Donald Trump might pull it away. Inflation, we're talking about tariffs, and that really is key, because the idea that we're going to see a massive ramp up in terms of tariffs, particularly on China, does cause concern around the potential for a surge in inflation. And if we see a secondary surge in inflation, this idea that Trump's good for markets might go out the window, because inflation resurfacing means that the Federal Reserve's pledge to cut interest rates going forward might be short-lived. So certainly that's going to be absolutely key. This is just a breakdown in terms of some of the different pledges that they've made. And key to it is that essentially both of them are pledging to spend money, but it's only Harris that is pledging to actually hike taxes on some areas. And that means that she'll claw some back. So when you're talking about record debt, the record debt is going to get even worse under Trump than it would under Harris, in part because Trump's talking about tax cuts for businesses. Harris is talking about tax hikes. Of course, that's not necessarily taking into account the difference in terms of growth trajectory, because if we see higher growth, then you're likely to see higher tax receipts, even if you have a lower rate on that. This is a breakdown in terms of the outlook for growth and for inflation under some of the different policies that Trump has announced in terms of immigration. And certainly it alludes to something that I saw Elon Musk supporting, even though he's on the side of Trump. And that is that if you cut a huge amount of people out of your economy, you cut inflation because you're seeing lower demand, and you're cutting growth. And so, certainly here in the UK, people might not necessarily want to hear this, but the more people that we bring into this country, the more GDP we have. And that's what Australia's exhibited, right? A lot of its growth has come down to just more people in the country. And that means that there's more hiring, more jobs, more tax, you name it. So cutting down on immigration and deporting people, that can be painful for an economy. So, a lot of these things, saying that you're going to deport people might win votes. But certainly if you're looking at the impact on US growth, it's not necessarily a positive thing. But again, it's not necessarily something that people want to talk about.
Maybe to add on your point, I think the other day I heard Trump say that if he comes to power, he's going to deport around between 15 to 20 million people from the US. So you can see, he's so determined about it. And again, you see, like you said, the more the population, the higher the GDP, and the higher actually even the national debt continues to skyrocket, because the national debt is brought about by the difference between the spending and the revenue. So the higher the population, the more the spending, the more the public debt will keep ballooning. So it's quite interesting. I really want to see how Trump will do that. 15 million to 20 million is not just a small number. So it's something that might create a lot of interest in the public opinion, public participation, actually.
I think what's interesting here is, I guess we were talking previously about the idea that Donald Trump might be inflationary. Because of the fact that he's increasing tariffs on goods from abroad. But then on the next slide, we're talking about how he's deflationary with this immigration move. So I guess there's an argument to say that the two could balance themselves out. If he ships enough people out the country to damage demand, then maybe it counterbalances the fact that he's ramping up the cost of goods coming into the country.
Yeah, true.
Yeah, here's another outlook in terms of how the plans for the two would impact debt levels. And certainly, I think this is something that is going to rumble on. I mean, we're quite accustomed to the US just continuing to grow its debt, but things have changed because this past year or so has seen a big ramp up in the cost of borrowing. And the rise in the cost of borrowing, whether it's, say, interest rates from the Federal Reserve or the 10-year that you're looking at, but ultimately people are having to pay more in terms of their mortgages or their car loans and things like that. That is also reflected in what the government has to pay when it rolls over its debt. And so we've seen a big spike in terms of debt. We don't want to see that continue, but it will continue. And as you can see here, under all scenarios that we're seeing from, this is from Bloomberg, all of them point towards an increased debt to GDP ratio. But for Trump, it's significantly higher. So the question mark is whether markets care about this or not. And certainly the rise we've seen over the course of the past week or so, well, actually it's past month, in terms of the US 10-year, despite the cut of interest rates, does raise questions of why that's happening. And part of it has been attributed to the fear around Donald Trump potentially ramping up debt. So do you think markets care about this, or are they just quite used to debt rising and that's just part and parcel of these economies continuing to spend and trying to keep the voter on side by not ramping up taxes?
For me, what I think is it's something to think about. It's something to worry about. The markets definitely they are going to react about this, because when you talk about the US debt, you see, we can contrast it with the bond yields, because we have seen of late the US Treasury move higher. As the debt increases, the US Treasury yields are going higher. So, which again definitely, they definitely impact the market. So it's a critical factor that we cannot be able to ignore, because as much as we are looking at the taxation and everything, it's also good to consider the fiscal trajectory, because that's one of the risks in the US economy right now. We are talking about the fiscal trajectory, and these are now the very tiny great things that the government is planning to do. Let's say maybe, for instance, how each and every candidate will face the US debts, whether maybe the measures they are going to use in terms of reducing the debt, because right now it's very high. Actually, it's at its all-time high. It's alarming. Everyone is
going to do it. One candidate's going to actually propose to at least take some steps, which is Harris, but Donald Trump.
Yeah,
doesn't
for
seem
Trump,
about that.
you see, for Trump, the debt is likely to go up because if you cut the rates, definitely, you see, we might see that the national debt skyrocket. So it's just a matter of the other things that they maybe probably once they're in power, what are they going to do in terms of addressing the U.S. debt? Because right now it's really alarming. It's a red flag.
This is the chart I wanted to briefly sort of bring up while we're talking about the topic, which is the chart of the US 10-year against the dollar index. And certainly if you're talking about trading FX markets, you're talking about trading the dollar most of the time, right? And as you can see here, a really close correlation between the trajectory of the US 10-year and the US dollar. So which one's driving which? I would argue it's probably the US 10-year driving the US dollar. And so, yes, we've been rising, but bear in mind, this rise is typically not seen when you're seeing 50 basis point cuts from the Federal Reserve. So why is this happening? Potentially, like we're saying, potentially it's all about debt. Possibly not, but certainly there's been a move over this period of time towards, or in perception towards, Donald Trump. And so does that mean people are fearful that Donald Trump means more debt? Maybe. Or is this a reflection of the move we've seen within expectations around the Federal Reserve, where, like I said, we were expecting 50 basis point cut in November. We no longer are. The same for December. And that came off the back of the jobs report a month ago. As we can see, that was around here. So the first Friday of the month. And that's where we sort of bottomed out, this double bottom formation. We moved higher in terms of yields and higher in terms of the US dollar. And that's why this week, I guess, is going to be really important, because if we see weakness in terms of the jobs picture, maybe we start to see it unwind. And certainly from a wider trajectory, you can see this downwards trend line. And so the gains we're seeing at the moment in terms of the 10-year and the gains in terms of the US dollar index could start to falter if we do see weak data. I provided a breakdown in terms of the jobs report on the Scope Markets channel. So make sure to check that out, where I go into sort of more detail about what we can expect over the course of this week. But certainly that's going to be really interesting coming into this, because we don't necessarily know if the dollar and 10-year is strengthening because of the Trump effect, or whether it's strengthening because of the shift in terms of monetary policy expectations. Let's get back onto it. What next for US indices? Here's where we earn our bread. Ultimately, gauging where markets are going is the name of the game, right? So I always find it funny, because some people spend all their time poring over data or caring more about the argument of, well, actually, I think markets are going to think this is good and that is bad and things like that. It comes down to price action, and it comes down to, what the market's doing itself. And certainly from a wider perspective, we've seen equity markets actually doing relatively well at a period of time that we've seen significant uncertainty from an economic standpoint, let alone what's happening geopolitically around the world over recent times. So I guess, do you think the strength that we've seen in equity markets is indicative of people growing increasingly confident about Trump? Or do you think that just reflects the fact that they think that equity markets are going to rise either way?
For me, I would want to approach it in a different scenario. Looking back to from the 2012 elections, 2016 and now and the 2020. So you'll see the past year election has been quite unique. If we look at the 2012 elections, basically the markets were now coming from the 2008 financial crisis. That is during the Obama. So what we saw, like for instance, the indices like maybe the S&P 500 in particular, we have seen, we saw a trend that during the election, we tend to see dropping slightly, maybe a slight low break. In 2012, we saw a drop by around 2.4% for the S&P 500. And then later on, after things have settled, now we are done with the elections, then they try to gain momentum again and start maybe going higher. So it has been a similar trend for the past three elections. The 2016 election was also brought about uncertainties because it was the first time Trump was being elected. So investors were not certain about, his policies, especially the tax rate, right? Cutting that is reducing the taxes. So I think we might probably, because we might see the same stance. We might see maybe slightly investors shying off slightly, and then maybe probably we see maybe the same scenario like 2016. I don't want to preempt. I'm not giving an hint that the market maybe probably gonna go up or down, but it depends on several factors. Again, history repeats itself. So we have seen what the market has done 2012, 2016, 2020. So yeah.
I've just noticed while we're doing this video, we've also seen some data out of the US. ADP coming in at 233, up from 110. Up from 159 versus expectations of 110. So massive beat on the ADP number. So, you know, if I'm talking about the idea that we could see the 10-year rollover and the dollar index rollover in that circumstance, well, that's not happening in terms of the idea of potential weak data out the ADP. Whether Friday's number is similar remains to be seen. Also seen GDP number coming out at 2.8%, down from 3%. So let's get into the next section. This highlights something that really, I guess I was alluding to really about the idea of maybe markets just do well irrespective. And sometimes you do see some jitters, like you're saying, when we saw Trump come in, markets were very uncertain about what this guy was going to do. He's a bit of a maverick. And soon enough, they settle themselves into a position where they're just reaching record highs on a regular basis. And you can see here that by and large, if you're looking at Democrats versus Republicans, there's not a huge amount of difference when it comes to market performance. Both of them enable stock markets to do well by and large. There's not a view that, like, you know, Republicans are always really good for the equity markets and the Democrats are really bad. A lot of it comes down to, as Donald Trump saw, what happens in the global economy, right? So if you suddenly have a COVID pandemic, you don't really have an opportunity to be able to have a particularly good economic environment. And suddenly everyone says that you've done an awful job in leading the country. The same kind of thing if you see a surge in terms of inflation. We had it here in the UK where we saw double-digit inflation, but that's something we're seeing around the world. It's very difficult as someone that's leading the country to say you're doing a good job, because everyone's suddenly getting hit. But that's something that's happening externally. So a lot of the time, the performance of the markets aren't necessarily just driven by policy from these presidents. A lot of the time it comes down to what's happening in the wider world, and it's kind of beyond their reach. So let me just give you a couple of sort of tidbits in terms of data, and this kind of gives us a guide on where things are going over the near term, or have gone in the past anyway. So this is a breakdown in terms of the previous 4 elections and price actions just before and just after in terms of the S&P 500. And essentially what we can see here is that a lot of the time we do see markets selling off into the event, often in a fairly dramatic way. But then you often see markets actually recovering quite significantly. 2012 is different from that. We saw markets rolling over after that, 2008 also, but of course we're in the middle of a sell-off. So a lot of the time it depends on the market conditions. But we do often see jitters within markets. You know, I guess the question mark is, are we seeing that at the moment? Because, you know, the S&P 500, we haven't seen that. We've seen it hitting record highs not so long ago, and now we're relatively close to that. So, you know, the volatility we've seen lead up to previous elections is not necessarily here on this occasion with the equity markets. And you might say that comes down to the position of the world economy, because we're at a period of time where we're moving towards pro-growth strategies. We're moving away from an idea that central banks are just here to drive down inflation, and instead it's all about cutting interest rates. And so that potentially changes things on this occasion. You can see here in terms of the S&P 500 performance prior to previous elections. This is 1 month prior. What we can see here, you know, it looks fairly choppy, and that does show you that, I guess to some extent, it shows you that there's a lot of uncertainty into it. So sometimes you see some optimism, sometimes you see some pessimism. In terms of the occasions where the incumbent has won, those are the green lines. So you can see that that is also relatively variable. The current occasion that we're seeing right now is the orange line. So you can see we're doing pretty well by historical norms over the month leading into the election. But certainly I would say that this isn't necessarily giving us a huge amount. And then you can see we're talking about the inauguration. This is the period of time between the election and the inauguration. Generally does well for equity markets. So that really does point towards the idea that once we get that clarity, markets do often do relatively well. This is the after election period, and that's what shows you exactly that, and shows you that, you know, apart from the two occasions that I've got here, which is 2000 and 2008, the 3 months following the election have all been periods of strength for US equity markets over the 8 occasions that I've got highlighted here. So there's a feeling that generally you might see some jitters coming into the election, but once it's resolved, there's a feeling of optimism going forward. Do you think that that's going to be the case this time around? Do you think we're going to see a strong resolution irrespective of what happens, or do you think that it's really going to come down to who wins?
My view of it is that, like I said previously, guided by the last election, basically from the slide that you have shared, we have seen mostly when during the election we see the indices, especially the S&P 500. In this context, we have seen a slight decrease in prices, especially in 2012. But 2016 was quite different. Because the market was driven by Trump's deregularization and the tax cut rate, but when you look at 2012, again, we had after the election, we were in the COVID period, right? And we saw a lot of volatility. So for the 2020, we cannot be able to really attribute the US election itself, because the markets were really affected by the COVID-19. But again, history repeats itself. Maybe this time around, we might see maybe probably, because right now everything is at all-time high. So either maybe we are going to see the continuation of the trend, or maybe a correction from the markets. So whichever the stance is, to be positioned accordingly.
Yeah. Let me just bring up the chart for the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. This is over the course of, let's do it over a set period of time. This is the past 3 months for those markets. And we can see that by and large doing relatively well. You can see, let me just get this on the right-hand scale. Tell you what, let me move these to the left. There we go. Right. So you can see here, NASDAQ falling a little bit behind there, S&P 500 and the Dow holding up relatively well. We have seen, of course, over the yesterday, we saw Alphabet earnings coming out. And they came out strong. So, of course, this week is all about big tech. And that is going to be absolutely key, as key as anything, really. You can see that, by and large, the trend is your friend, as you're saying. And the trend remains upwards across the 3 indices. Notably, if we're looking at this period of time, the NASDAQ's outperforming, the S&P's in the middle, and the Dow's at the bottom. And that would highlight the fact that the NASDAQ has a massive weighting for US tech firms. The Dow has I think only 2 out of the Mag 7 names within it, and the S&P is somewhere in the middle. I mean, it has it all, but then it's got another 493 stocks within it. Let me just quickly give you a sort of look at how price action's shaping up at the moment. We can see very clearly that we're seeing these sort of retracements coming in originally into a sort of 50% retracement move, coming into the shallow retracement there. So not necessarily seeing much momentum towards the downside as we entered October. We saw strength over the first 2 weeks, 2 to 3 weeks of the month. And now we're sort of pausing. It's not like those moves that I'd showed you previously in the lead up to previous elections where we saw a sharp, major move towards the downside. That's not happening on this occasion. We're seeing potentially some sideways price action in the lead up to this as people try to wait for that announcement. But certainly as it stands, because we're talking about this expectation within markets that that Donald Trump's going to win, it's difficult to know whether the moves we're seeing at the moment is just being driven by the view that Donald Trump's going to win or the view that markets are going to go up on either scenario. So I do think that we could see a bit of a hit taking shape if we saw Harris take the victory. But key to that might be Congress, because ultimately, whether it's Trump or whether it's Harris, both of them need both sides of Congress, whether it's the House of Representatives and the Senate. If they have full control, they can do exactly what they want. If they don't have one side or the other, they're going to find it very difficult to pass their more hardline measures. And so when we're talking about these corporate tax hikes from Harris, she will not pass them in their entirety unless she has both sides. And markets currently think that that's very unlikely that she will. So Harris could win, but if she doesn't have both sides of Congress, markets could still say, okay, fine, it's the status quo. We're not going to see much change from what we're seeing at the moment under Biden. The more hardline measures that she's proposing aren't actually going to pass, so we feel fine. And generally, markets are relatively optimistic when they have that sort of deadlock, as much as you get encouraged by the idea of someone coming in and shaking things up. Unless they have the ability to do so, that is certainly something that won't happen. And you can see here that the breakdown in terms of who wins, but also whether the Congress is split or whether they have a sweep, that can make a significant difference. And according to historical data, as we can see here, the worst case scenario is a Democrat full sweep, right? So if Democrats take both sides of Congress, that would be the worst case scenario for markets. And you can see on this occasion, that would mean Harris basically being able to ramp up taxes. The positive side of things is pretty much everything else, quite frankly. So people are more receptive to both sides of Congress going to the Republicans than they are to the Democrats. And that would stand for this election as well, because if Trump gets his way, he'll be able to cut taxes, and that will benefit companies, whereas Harris would do things that are detrimental to companies if she has both sides. So I would say that by and large, you're looking at equity markets that are bullish in their current form. They've hit record highs recently. By long-term standards, in terms of the trajectory post-election, they are in a period that should be good for stocks. And when we're looking at what markets are looking for, markets just do not want to see a Democrat full sweep of Congress. And that, I think, is going to be key to it, because I think in the three other circumstances, which is the split Congress for the Democrats or a Republican split or sweep, I think those three circumstances will all see markets pretty swiftly feeling optimistic once again, even if we see some jitters over the near term. So I do think the breakdown on how this election runs is going to be key. Just a note, if you guys have any questions for us to cover, we'll take them at the end. If there's anything in particular you want to ask us opinions on, or if you have markets that you want us to chart at the end, then make sure to jump into the comments. What about the FX market? That's going to be, of course, key. But part of it really is just about the US dollar. We can talk about hundreds of different FX pairs, but really, when we're talking about this election, it's really about the US dollar first and foremost. And then you can sort of look at maybe this economy might suffer under this candidate or the other. So how are you feeling about the FX markets at the moment in terms of the US dollar? We've seen it strengthening over the course of October. Do you think that strength is going to continue, or do you think that we might start to see that roll over?
Yeah, looking about the forex market, like you said, we have seen the dollar index trying to gain a trajectory. So right now, from where the markets are, I think we have seen the dollar index in much some kind of consolidation as we enter into the election. So I think what is important here is, again, the candidates who wins, depending on the policies. And like we said, well, is Donald Trump good for the market or Harris bad for the market? So I think the dollar index is going to respond based on which candidate takes the day. But again, let me pull my chart for the dollar index so that I can be able to explain this. So just a minute. So
I think while you're doing that, I can kind of comment a bit myself. I think what's interesting is that people talk about Trump being good for markets, and that's why we're seeing equity markets rising as you're seeing support for Donald Trump. But the US dollar is rising as well, and generally a rising dollar is a haven, right? It's a risk-off move. But people are also saying, well, Trump is inflationary, and we talked about that before. Trump being inflationary might quell potential rate cuts from the Federal Reserve, and so that could lift the dollar. So I have seen many places people think that Trump would be pro-dollar. He would be a candidate that would lift the dollar. But the caveat to that is that markets, when they are fearful, they head to the dollar. When they're not and they feel great about things, we generally see the dollar start to roll over. So there's sort of arguments on both sides here.
Yeah, the reason why the dollar index is very key in the forex market is because mostly the pairs that are going to be affected, these are the major currency pairs or the pairs that are paired with the dollar. So the markets are going to respond according to the dollar index. So like I was trying to explain, you can see the dollar index got some support around 100 level. And we can attribute this.
I can throw my chart up anyway. So if you want to talk through the chart, you can, or else bring yours up.
So you can see the screen now?
No, we can't now. You'd have to add it as a source.
All right. No worries. But basically, we all know where the dollar index is. So the key thing, as I was trying to say, is that what will really shape the trajectory of the dollar index is the outcome of the elections. But previously, we have seen the dollar index in that upward trajectory. So for me, I'll be skeptical with the dollar index. Looking at it in terms of whether Trump wins, we might see a positive dollar. We might see, whether Trump wins, we might see a weak dollar. If Kamala is going to win, I'm looking at a positive dollar index. And that's how I'm looking at it in terms of now affecting the stock, the FX market.
It's interesting that you say that, because if we throw this up, right, we can see the trajectory of those betting odds for a Trump win that have been rising recently have gone hand in hand with a really close correlation between the betting odds of a Trump win and the US 10-year and the US dollar index. So like you say, there is a perception at the moment, certainly given this chart, that a Trump win would be good for the US dollar. But like I said, that is undermined a little bit by the idea that the US dollar generally goes inverse to US stock markets because it's a haven. And so part of it also comes down to what the Federal Reserve are going to do going forward, and whether we deem Donald Trump to be inflationary in terms of his measures. And that might come down to Congress, right? If that's Congress is split, then maybe he won't be able to do as many things, and he won't necessarily be as inflationary. Another thing that's worth noting here is this sort of breakdown in terms of which currencies are most exposed by Donald Trump's policies. And certainly, Mexico's a key one. Mexico is, of course, a close neighbor. And in actual fact, they've got relatively close ties. So you could see some moves for the Mexican peso. This is the daily time frame for the US dollar against the Mexican peso. We have seen it gaining ground of late, now trading into a key resistance level. So there is a fear that the Mexican economy might take a hit as we suddenly see Donald Trump back into power, which by historical standards, he's not been easy on the Mexicans. He wanted them to pay for a wall, and he was constantly battling against them in terms of tariffs. But they have got a decent trading relationship now, to the extent where the Chinese are now apparently going to try and circumnavigate or circumvent the policies under Trump by just building factories in Mexico and shipping them across the border. But certainly this is going to be a really interesting chart to watch out for. We're currently trying to break through resistance of 201.58 for the US dollar against the Mexican peso. And certainly if we put that against, let's say, the US 10-year, then we can see whether this is sort of closely tracking those expectations for Donald Trump. Let's see. It's the daily time frame. Yeah. So more recently coming in line, but prior to that, you saw more of an inverse relationship. So, it's arguable whether this is just a Trump trade or not, but certainly the US dollar gaining ground significantly against the Mexican peso and breaking through resistance. This is another way of looking at it. If you look at Trump media, that is, of course, Donald Trump's social media platform, that has been also trading in line with the US dollar. So if we're arguing the same point previously about, you know, the difference in expectations around a Trump win impacting the dollar, you've seen the same thing in terms of his social media company that has been surging recently, and its trajectory when overlaid with the US dollar looks remarkably similar. So it does point towards the US dollar strength coming from a expectation that Donald Trump's going to win. And so a dollar strength story appears to be about Donald Trump as much as anything. This is a breakdown in terms of the US dollar in the lead up to the election. By and large, what we see here is that when an incumbent ends up winning, i.e. someone remains in the White House, the US dollar weakens. But generally, when you see someone new coming into the White House, we see the US dollar strengthen. And that happens in the aftermath as well. Generally, when you see a change at the White House, we see the dollar strengthen, in particular over the course of the first couple of weeks. And then, you know, maybe markets just get a little bit more settled and start to think maybe it's not going to be so bad. But certainly, I do think the more change we see, can often see the US dollar gaining ground. So whether, you know, if Trump wins, we could see the US dollar rise anyway because of the moves that we're seeing at the moment in line with those expectations. But also, you know, we see greater uncertainty with a change at the White House. And therefore, you know, the US dollar looks like maybe, according to these historical trends, it could have further to run if Donald Trump comes into the White House. What about commodities, Timothy? What are you thinking? You know, certainly key amongst this is the price of gold. It's hit record highs seemingly on a daily basis. It's a great trend. Certainly one of the favorites for scope market traders. Do you think that's going to continue? You think that the price of gold is going to do well under either of these leaders in particular?
Yeah, my opinion is that the price of gold, you can see right now it's almost all-time high. Today we saw 27.89. For me, I feel that gold might not really respond to the election itself, but actually to the geopolitical tensions that are around. And also right now we see like the China, the banks, the central bank in China, and they are basically trying to preserve their money in terms of buying more gold reserves. So we might see gold continue, prices of gold continue going high, irrespective of who wins or maybe who loses, because there are other underlying factors that really affect the gold market. So, for instance, I think my chart has refused to share, but no problem. When you look at maybe the trajectory of the elections, the previous 3 elections, in 2012, we saw gold before the election, the price of gold were going up, but immediately after the election, we saw the price of gold pushing down slightly. We saw some retracements. All the 3 elections have actually had the same scenario. After the election, we see the price of gold some slight corrections, and then we see the price is going higher. And maybe probably might see the same scenario because, of course, being all-time high, we anticipate some corrections. Maybe we might see some corrections after the elections, and then thereafter we start seeing the prices of gold pushing more high. Again, comparing the two, maybe comparing the Donald Trump regime and Joe Biden regime, again, we have some similarities in terms of the gold chart because in terms of gold prices. So all of them, we have seen gold prices skyrocket. So the reason why I feel, irrespective of who wins the elections, I anticipate to see more gold, more high gold prices. That is my anticipation. But of course, waiting for the dips first, and then maybe we might see the prices going higher.
Yeah, I think that's key, right? I think part of your job as a trader is to try and find the right markets. You know, I'm a proponent of thinking that finding the right market is probably the most important part of it, because when you find the consistent markets, then trading becomes a lot easier. If you're finding markets that are super volatile in either directions, are very unpredictable, it's difficult to trade, right? And this is a market that just keeps going up. And you can see 2024, I mean, apart from January, it pretty much just goes up every single month. And so, I was overlaying, say, the dollar index. And what's notable here is I've inverted the dollar index because typically they move opposite to each other, the US dollar and gold. That relationship is broken. And that's because right now, markets don't really care about that. As you've alluded to, a lot of it comes down to some of this buying we're seeing from central banks, crucially throughout BRICS nations, Russia, China, absolutely gobbling up gold. And so, the trend is your friend. And I agree with you. I don't necessarily think that this is something that's going to be massively influenced by the election. Whether the US dollar goes up or down, it seems that gold continues to move towards the upside. And then we'd look at, say, silver and say, well, what might silver do? Silver's generally sort of its little brother. Sometimes it outperforms, sometimes it underperforms. I would expect over a period of sort of strength for gold, you'd see silver doing relatively well as well. Just briefly talking about the energy markets, WTI, of course, selling off in a heavy manner. And key to this is the question mark around, is Donald Trump even good for oil companies? Because whilst he's all about drill, baby, drill, that increased drilling drives down prices because it leads to higher production. So that, I guess, brings us on to the question mark about what about stocks. And stocks, certainly in the energy market, is not a given whether they're going to do well or poorly, because energy stocks would prefer to see high energy prices. And you can see that here in terms of the breakdown. There's an investment in green energy on Harris's side. When it comes to Donald Trump, he's all about traditional markets. So we're talking about traditional industry, traditional manufacturing, energy, oil and gas. That's what he's on the side of, and that's all well and good. But if you want to be on side of the oil companies, higher oil prices is probably what they want, rather than saying you'll let them drill, because we've already been seeing record production in the US anyway under Biden as he tried to drive down inflation. So I think that when we're looking at some of these companies, it's not a given that energy companies would do particularly well under Trump. It would more have to come in line with changes in terms of taxation and tax benefits for those oil companies, rather than the idea that he's just on their side, because being on their side might mean more production and might mean lower prices. Elsewhere, manufacturing, tariffs on imports, serve to benefit domestic producers. So it's not a given that all manufacturing companies will do well. It really depends on where you're producing, and a whole host of different factors here. But green, certainly a key part of the policy for Harris. Here's a breakdown in terms of, according to Bank of America, what sections of the economy would do poorly under Harris and strongly under Donald Trump, according to the tax hikes for Harris and the tax cuts for Trump. And key to this is consumer discretionary. So, of course, you've got consumer staples, which are things that we can't do without. And then discretionary, which is, I might treat myself to a pair of trainers or some clothes and things like that, right? Consumer discretionary expected to be hit hard under Harris in terms of earnings per share. Communication services, financials, I think, are a really key part of it, because financials are deemed to do very well under Trump. And then, the same kind of thing on the flip side, consumer discretionary, communication services, financials. Those are the three top outperformers that are expected under Trump if he was to cut taxes to 15%. But overall, for the S&P 500, a 4% boost to earnings per share. So this does highlight the idea that Trump's good for markets, Harris is poor for markets, because if they manage to get both sides of Congress and they manage to push through their tax cuts or tax hikes, they have knock-on implications when it comes to the companies. This is a breakdown in terms of the S&P 500 under Trump in his previous reign, and you can see which sections of the economy did well or poorly, notably financials and IT. IT, you can just say, well, look, those are the big growth names. So generally when markets are bullish, we see growth outperform. But certainly I would say there's a standout performance here for financials within all of the first 3 years of his reign. So I would say financials, a key market to be looking out for as we move forward. I know we don't have a huge amount of time, so I'm just going to breeze through this so we can take a last little look at some stocks that might be affected. This is the performance in the S&P 500 over the past month. But of course, we have earnings season that sort of chops things up. You can also see it in a sort of line format. These are the sectors of the US economy over the course of October thus far. It's tech names that are performing well, but second to that, financials. So financials did well under Trump. They're doing well over a period where markets think Trump's going to win, and therefore financials, I think, could be a really key one that we could see. If Trump wins, potentially the big banks do well. If Trump loses, then potentially we see some weakness, and that's highlighted here with my potential winners and losers. It's not a given, right? You don't know who the winners and losers are going to be, but there's a prospect of the banks doing well under Trump, and we've seen that played out. Energy, it's not a given, because if we see higher production, then we see lower prices, and that doesn't necessarily benefit these names, but he's certainly on their side. Defense spending could go up, but then there's argument on the other side where he doesn't necessarily want to carry on the Russia-Ukraine war. And then sort of industrials, manufacturing, that is certainly going to be a key part of it as we see the potential for the tariffs to come into play on Chinese imports. Potential losers, you'd be talking about healthcare, but green energy is the one area that you'd say Harris really outperforms. And then Harris, the flip side of it, green energy, green infrastructure names. There's some talk about her potentially coming to the benefit of the sort of marijuana industry, but that remains to be seen. That's more of a sort of left field theory. And then there's the argument about healthcare, right? If she wants to drive down prescription prices, is that good for certain companies? Is that bad for others? Medicaid, Medicare, greater support for that should benefit a wider sort of demand for health products. But if there's companies that are relying on keeping their prices elevated, then they wouldn't necessarily do as well. Energy side of things, ExxonMobil, Chevron, two companies that potentially you wouldn't necessarily see do too well under her on the prospect that we would do well under Trump. But, I think it's arguable. I think a lot of it comes down to the trajectory of energy prices. If you've got anything to note on that area, Timothy, it'd be great for you to jump in.
Basically, just like what you said, I think it's very important to look at these sectors in terms of each and every candidate. So depending on the themes or what the narratives of each and every candidate. So for instance, like you said, Harris' victory could see the renewable energies, the health sector, the constructions sectors, company in those sectors gaining, having a positive view of it. Then the Trump, in case of a Trump win, of course, in terms of the policies that Trump is advocating for, we might see the financial, especially the financial and the manufacturing sectors, gaining really quite a lot. One of the companies that really interests me is in the financial sector, especially when you look at the Goldman Sachs or you look at the JP Morgan, the Bank of America. So if for instance we have Trump win, we are going to see these companies really gain a lot, guided by the policies that Trump is advocating. But I also want to hear your sentiment. What do you think of Tesla? Because of late you have seen Elon Musk really advocating for Trump's victory. What do you think? Is he after something, or what are your perspective on that?
Well, he's already getting massive payoffs from the US government in terms of tax credits. I mean, ultimately, the idea that he would be within power, within government, would put you in a position where you'd think that he would benefit from the decision making from Donald Trump, and he would be in Donald Trump's ears. If he was to implement something that wouldn't work in Tesla's favor, you'd think that he would say, maybe go easy on this. So that provides the basis for strength. Interestingly, I just saw today BYD actually overtook Tesla in terms of revenues. I think that's going to be absolutely key. If they can stop the likes of BYD and some of these big Chinese EV manufacturers from entering the US market, Tesla's going to do really well in the US as we go forward. But then what does that mean in terms of Tesla in China, right? It's a massive market for them. You know, arguably you could just say, well, they're already producing in that region, so they should be doing well. We've also got all of this new stuff, the Robotaxi, the Optimus product. And I think that's really interesting because, you know, we talk a lot about AI, and AI is the future. AI is, you know, going to be, you know, the reason why the market continues to move higher, and it's going to be a whole new source of growth. Yes. But when you look at what we're seeing from a number of these big companies so far, there's not a huge amount that's sort of game changing. It's going to change your life. If I'm living with a robot in my house, that's going to change my life. Let me tell you. So the idea of putting AI into robots and putting them into your cars, that could genuinely be the future. And it's something that's impacting your life in a major way. So if Tesla can get those products out there and it becomes a norm within your household, then Tesla could, as Elon Musk has predicted, you know, could go stratospheric essentially. But that's a big if, because he's quite used to doing a Donald Trump where he can just promise something and it's not a given that he'll actually deliver on it. He can say that he's going to deliver self-driving robotaxis and in 3 years, and in 3 years' time, everyone will be asking, you know, how long's it going to be? I guess from a stock standpoint, as a shareholder, you probably want him to keep saying that it's just around the corner, because if he tells you it's 10 years away, you're going to sell the stock. So instead, people buy it because they think it's just around the corner, just around the corner. I have no doubt, you know, just like he's done with SpaceX, he has the ability to deliver on all these things. It's just the timelines generally do slip. But I do think in terms of the future prospects for Tesla, it does look particularly strong. And I guess this brings us on to I guess we can wrap it up with a view on big tech, right? Like, do we think that big tech's going to continue to reign supreme? Or do we think that we're going to see this sort of recalibration towards the rest of the economy? Because we've spent much of this year talking about this shift away from big tech and towards the rest of the economy. But, you know, when you've got these tech names that are so big and they continue to grow, then ultimately it does provide the basis for us to continue to rely on them.
Yeah, sure. I think irrespective of, for me, when I look about these companies, whether they are the big techs, I really want to look at them in terms of the policies. But again, in a summary view, looking at more ballooning for these companies, especially the tech companies. Depending on who that is, for instance, if you look at the Trump's policies, so I'm expecting these tech companies basically to favor the Trump regime, to favor the tech companies. But one of the reasons why, even just to deviate a little bit, the reason why I ask about Tesla, you find that irrespective of Tesla gaining even in the Trump trajectory, I'm looking at it even in case Harris wins the election, because we have seen Harris has been supporting promoting electric vehicles in his campaigns or in his narrative, basically in terms of expanding the EV infrastructure. So the reason why I'm looking at Tesla is because I see it gaining in either side. So whether Donald Trump, whether Harris wins, I think Tesla does not stand to lose much in terms of the election outcome.
Yeah. I mean, it's a great point, quite frankly. I think there's an argument on both sides. You wouldn't necessarily say that a Trump win is going to be super anti-Tesla, because Elon Musk is going to be part of his team. But when we're talking about the potential benefactors of Harris, it's all about green energy, green infrastructure. So certainly that green transition is key to that, and Tesla's, you know, the face of that. Let's just bring up the chart quickly for Tesla. We can see that here on the weekly time frame, just coming into this area of resistance that we can see here on the weekly. So we've got this sort of zone 265 up to 279 as resistance. Starting to see a bit of weakness, but certainly it comes off the back of this big boost that we saw around earnings for Tesla. So potential bottoming out here, and for us to move onwards and upwards, that possibly could be the case. But it's very interesting to note that we're looking at a company that could benefit on both sides. I just wanted to quickly bring up what looks like a very messy chart, but these are all of the different names that I provided for one candidate and the other. So first and foremost, this is the breakdown for the last month, I believe. Yep. For those companies that I mentioned for potentially winning and losing under Donald Trump. And you can see the outperformers have been the banks. And that's certainly something that I was alluding to, that Donald Trump would be good for banks. And he has been in the past. And I think he probably would be in the future. So you can see Bank of America up 8% over the past month, JP Morgan 7%, Goldman Sachs 6%. So certainly that's really notable to see. And on the bottom end, some of the underperformers, Lockheed Martin actually weakening, that could be the idea that possibly that he would pull out of the Ukraine-Russia conflict. And then some of those, some of the likes of the sort of green transition names, Plug, NextEra, United Health, I think that is. Yep. So United Health. So yeah, a lot of the companies that we're talking about potentially losing under Trump have been losing ground. The ones that are sort of in the middle of the road, like ExxonMobil, are sort of up 1%. So there's some indecision on that front. But certainly I would say the standout performers at a period of time where seemingly everyone's talking about the possibility of Trump coming into power, it has been the likes of the US banks. So I would say financials are going to be really key as we move forward. This is a breakdown in terms of some of the performers for Harris. And certainly if we're looking at Enphase Energy, that has been a big downside move. But I would say what's notable here is that comparing it to the list of names that supposedly benefit Donald Trump, there's a significantly higher proportion of them that are heavily down over this period, you know, down 27%, 18%, 11%, 8%, 6%, 5%. So certainly there is something to the idea that these companies could suffer more so under Trump, or that maybe we've been seeing them run up on the prospect of Donald Trump, on the prospect of Harris coming into power. And now over the course of the past month, that starts to be undermined somewhat. If there's any questions you guys want to ask, we're happy to answer them. Otherwise, we're going to wrap it up. We've already run over by a quarter of an hour, but of course, we're happy to do exactly that. We're happy to continue to talk. We can talk forever, but we had outlined an hour. We've gone a bit over that. But if there's any questions you guys want to ask, then make sure to put it into the comments. Give a couple minutes and then we'll wrap it up on that front. But certainly, I think, you know, from my perspective, we're looking at an election that arguably it's going to be as important as to whether we see Congress split or held on both sides. That's going to, in my mind, be as important as who wins. Because
I think one of the things to look at, you know, Trump, just in case looking at it, you're looking at the last time in the 2016 election, we find that there was a delay in terms of result relay, which actually resulted from Trump not accepting the defeat. Because I remember we had some vote count in Georgia, counties like Georgia. So probably we might see a same scenario. Probably if Kamala wins, if Kamala wins, we might see maybe a similar kind of scenario. Because I remember that's also what led to the attack of the Hill Capitol, because they were trying to jeopardize the process of the vote count. So anything is likely to, maybe I'm not predicting, but we might see a similar scenario. And actually, even the market reacted so much in terms of the vote delay. We saw the market really tank. We had some good some corrections. That's when the S&P 500, we saw some corrections. Gold, we saw some corrections. So again, like we say, history repeats itself. So it's good to look at both sides of scenarios. If this happens, what is likely to take place? If Trump wins, what is likely to take place? If Harris wins, what is likely to take place? And that's how you're able to position yourself as a trader. Basically, don't rely on one side. Don't be one-sided. When it comes into the financial markets, it's good to look at all possible outcomes so that it doesn't get you in surprise.
Yeah, and I mean, you know, I guess key to it, like you're talking about, like the postal count and things like that. If we look back at the previous election, Donald Trump was saying, oh, the postal count is all rigged. You know, you've got to come in person. This time around, he's actually pushed towards it. And we've seen early counts coming in his favor, whereas previously it was heavily Democratic. So there's a question mark, I guess, around whether that would mean that he's going to see strong early numbers, which everyone thinks Trump's going to win, strong late numbers when we see all those postal counts coming into certain areas. And then when we see the sort of in-person vote coming through, maybe it decimates that vote and actually we see a stronger showing from Democrats. So, I think that we're likely to see plenty of volatility when it comes to this this election. And certainly, just like last time when Trump thought he'd won it and all of a sudden you see all these postal counts come in, I think that the way that we see it, the order of how things are playing out is going to be absolutely critical. Just a quick one. Eric asked about repeating our analysis on gold impact. We're basically of the opinion, both of us, that we're looking at a market that has by and large managed to outperform irrespective of market conditions, because when you overlay the price of gold over, say, the US 10-year or over the dollar index, you can see that gold has been performing well irrespective. And a lot of that comes down to buying from the likes of the BRICS nations, the likes of China, likes of Russia. And so that has provided the basis for outperformance irrespective of what the market is doing. The caveat to that in my mind is, people always say gold is a haven. Gold is not a haven when the market's selling off in a heavy manner. If the market's collapsing, gold goes with it because everyone sells everything, right? But by and large, if the market's in relatively orderly condition, the trend is your friend, and the trend remains up towards the upside for the time being for gold. And so, given how it's managed to essentially just push through any market scenario of late, I think both of us are still relatively bullish gold as we go forward, and by that as a proxy silver as well. I think we'll wrap it up with that. It doesn't look like we've got any more questions for this session. Like I said, we'll have another one in the aftermath of the election. Hopefully we have the result by then. That's going to be on the 7th. It's going to be the same time. So make sure to join us. We will have a recording of this. I believe we'll put it up on YouTube as well. So keep an eye out for that, and you'll be able to look back on the webinar. Certainly, Mike saying, would you advise from staying away from active trading until the election's over? Quite frankly, trading is up to each person, because for each person that hates trading the non-farm payrolls event, you've got another person that makes their money on it. I can't advise. I'm certainly going to say be careful. Make sure you're employing good risk management. Make sure you're putting stop losses in place if you are trading it. And maybe you're not, right? Maybe you say, I want to see until the result, and I know that in my mind, if the result is this, I want to trade it by doing this, this, this. If the result is that, I want to do that, that. Maybe that's your way of doing it. Maybe you don't trade the actual event over the period of time, or maybe you do. Maybe you see one particular swing in one direction and you think, actually, I think it's overclubbed it. Maybe because we haven't yet seen the postal vote coming out and I think it's going to go in this direction, we could swing in the opposite direction. So quite frankly, it comes down to each and every person, each and every trader, and their sort of risk attitude. But I would say, be careful, make sure to practice good risk management, and also put your stop losses in place, because you can see some major swings, and the name of the game is minimizing losses, maximizing profit. Good luck for it. It's going to be a crucial period of time, a really interesting one for all of us around the world, and we'll make sure to cover it in the days following the announcement on the 7th, and we can go through it and pick the bones through it and try and see exactly where we go from here for financial markets. Thanks a lot, Timothy. I appreciate you coming on this with me, and thanks everyone for joining us as well. We'll sign out with this. Thanks a lot. Cheers, Timothy.
Thank you, Josh, for hosting me. I appreciate it.
Thank you. Cheers, guys.